Oh, yeah, treacle, yeah, love an eel. Hello, everybody, welcome back. I'm Dr. Zeus, and you're tuned into channel 33. That's a Coco, the only money channel where we guarantee to make at least one person out there extremely angry. And why would they be so angry? Well, I'll tell you, yes, I will, a choo-choo, because old Zeus here, have I got a deal for you? And then some, straight from the gods themselves. For a single payment, your favourite benevolent deity will deliver you 4,000% APY. What did he say? 4,000%? He's off his nut. Well, I'm not off me nut. Ponzi, pyramid, I don't think so. Don't you worry, we'll leave that to the Egyptians. Old Zeus here, well, we aim a little higher, yes we do. Right to the top of Mount Olympus. So, it takes no time to stake, so make like a cake and rise up with me.
I know you. You're a DeFi citizen. You've been around this space long enough to know 3-figure APYs, well, they're fleeting. And only for the risk-hungry farmer. So a 4-figure APY, well, that's got you thinking.
Are they having a fucking laugh? In 2021, no DeFi protocol has quite caught the eye like OlympusDAO, which is why it's kind of appropriate that this should be our final Defiant Weekly of the year. OlympusDAO inspired a devoted following of Ohmies, and you'll have seen the 3-3 meme everywhere. Then there were the forks, so many forks. Single-handedly responsible for DeFi 2.0 and its promise of Protocol Owned Liquidity, it seemed the project's gamified model of a reserve currency would rise and rise forever. But after peaking at the end of November, critics have begun to pile on, declaring the bubble has burst, that the Ponzi's true colors have been revealed. I'm sure you have questions, so in this special episode, I'm going to break down what's actually going on to create that mythical APY, before a special interview with the new notional front person for the project, JaLa, to discuss the challenges of that difficult second album. This is the Defiant. So let's just go through and do a quick high-level overview on what OlympusDAO actually is. One of the key primitives in DeFi is, of course, the stablecoin, an asset designed to be non-volatile. The idea being that this asset will hold the same purchasing power tomorrow as it does today. In other words, the plain old, simple dollar. Except we know now that there is simply no way to issue dollars at the current rate without seriously diminishing spending power. Ergo, a dollar-denominated stablecoin is as vulnerable to inflation as the green it's backed by. Now, we've seen a multitude of algo stablecoins come and go, all purporting to have solved the conundrum of making a stablecoin manage its peg via pure maths using things like seigniorage and rebasing mechanisms. The key word here is peg. Holding a crypto asset to a fixed value is kind of a big problem. So big, in fact, that Olympus decided not to try. Ohm is the token of OlympusDAO, and yes, one Ohm is backed by one DAI, which is itself an asset-backed stablecoin. But its price is not limited to one DAI. Backed, not pegged. The Olympus treasury backs every Ohm with at least one DAI, and were the price of Ohm to fall below one DAI, then the protocol is designed so that it will buy back and burn Ohm, thus pushing the price back to at least one DAI. Now, in reality, Ohm trades way above one DAI. It was $1,415 at one point. So the right way to think of the Ohm price is, in fact, one DAI plus the market premium. And if that's baking your noodle, take some time to ponder it while we hear from our sponsors. Don't let high gas costs keep you out of Ethereum. A Balancer, the gas-optimized vault architecture, makes trading cheaper than anywhere else. Liquidity providers can optimize their fee earnings using the dynamic fee system that automatically adjusts to market conditions. You can also use asset managers to lend out idle assets, dramatically increasing your capital efficiency. And because Balancer is an open platform for flexible, automated markets, you can choose from stable pools or weighted pools. And in the future, more designs will be created that, well, they don't even know about yet. Check it out at balancer.fi. Do you want to get actionable insights and find new investment opportunities before everyone else? Nansen is a blockchain analytics platform tracking more than 100 million wallet addresses. Make informed decisions on your yield farming and investments through dashboards like hot contracts, smart money, and NFT paradise. See who is aped into an NFT collection or farm, and look into the behavior of money flows on-chain. Sign up now at nansen.ai and become a smarter investor today. Oasis. Well, that's been trending a lot in the DeFi space lately, but what is it? Well, Oasis is the leading privacy-enabled Layer 1 blockchain network, ideal for DeFi due to its instant finality, 99% lower gas fees, high throughput, and privacy protection. Founded by Dawn Song, a Berkeley professor and one of the world's foremost experts in computer security and artificial intelligence, Oasis is among the top 2 invested blockchains with one of the fastest growing developer networks in the industry. Oasis has an established partner ecosystem with companies like Band, Chainlink, Genetica, Nebula, BMW, Binance, and more. Recently, the team announced a substantial $160 million Oasis ecosystem fund, supported by top industry backers such as Dragonfly Capital, Electric Capital, Jump Capital, Pantera, and more. The fund is dedicated to help projects build on Oasis. If you want to receive funding, visit oasisprotocol.org and apply today. Last but not least, Soooooo, the first DEX built on Oasis, will launch soon, and there's already an airdrop running. Check it out today at sooooo.com. So how does it all work then? Well, the big draw for most people is Ohm staking, currently sitting around 4,350% APY. Also note the 3-3 here. That's an important part of the Olympus game theory, and we'll come back to that. So how is this all possible? Well, very simply, Olympus is a treasury management monster, and it generates enormous profit through selling bonds, through yield-generating assets such as LP tokens, and by depositing assets it owns, such as DAI, into yield-generating protocols, like, for instance, Compound. Now, those profits are almost entirely passed on to Ohm stakers, with 10% reserved for the DAO. The 3-3 in question refers to a very simple game-theoretic matrix illustrating possible beneficial and detrimental actions users of the platform could take. Staking and bonding are considered beneficial to the protocol, while selling is considered detrimental, so make it better for people to bond or stake than to sell. Ohm's treasury, also known as its PCV or protocol control value, is the value of the funds accumulated by the protocol. And as it accumulates more assets, more runway is guaranteed for stakers. In other words, higher APY for longer. Now, another key concept that became the mainstay of the DeFi 2.0 meme is Protocol Owned Liquidity. Now, we've covered this extensively in our DeFi 2.0 film, but let's just recap a little bit. Olympus owns an enormous amount of its own liquidity, like seriously a lot. If you think of farmers continuously hunting the most profitable farms and then shifting liquidity on a whim once those incentives run too low, well, Olympus isn't required to pay out artificially high APYs to keep them interested. Not at all. Instead, it acquires its liquidity via the bonding mechanism. It then earns fees on every swap and guarantees that there's always a market to support a transaction. So let's take a quick look at the Olympus app itself to get a bit more of a feel for the protocol.
So here we have the dashboard, and here you can see the market cap is $2.4 billion. The current ohm price is $394, and the backing per ohm, $79. So there's $80 above basically the baseline backing for an ohm, which is one DAI. So we can see the total value deposited, and the graph is not looking the prettiest. Let's be honest here. It's been up here and then it's starting to decline rapidly. But of course, we know that the overall market sentiment right now is somewhat fearful, somewhat bearish, and dropping. The key thing here is the protocol owned liquidity. This is how much of its own liquidity Olympus actually owns. 99.92%. That is almost all of it. Pretty much all of it. That's a staggering amount. The runway available here, it says 0 days. That's actually wrong. Let's expand this and open it out. We can have a look at the runway here. So if the APY is 2,500%, still it's not bad, is it? They've got a year's worth of runway. At 5,000% APY, they've got 310 days of runway, and the current runway is 373. So that's how long it can continue paying out at this rate. If that APY goes down, then the runway gets longer. But still, there's a year for them to continue paying out at this rate. So in general, that feels pretty healthy. So let's go ahead and have a look at the staking side of the dashboard. Here we can see the APY is 4,349%. And what I like here is they've added zaps, so you can zap directly from USDC, from DAI and ETH. So what that will do is effectively swap your USDC, DAI and ETH directly into sooooo, which is the staking flavor of Ohm. Then we have wrapping. Don't need to worry too much about that. That GOM is the governance token, which is coming in version 2. I'll talk about that a bit later. Then we have the bonding side of it. So here we can bond assets, and all of them are sold out. You can't bond anymore. They have too much. And isn't that delightful? But here you can see we could have bonded DAI, Frax, Wrapped ETH, Ohm Frax LP pairs, and Ohm WETH LP tokens. And those are now fully supplied and earning money for the treasury. What else do we need to look at? So here, if we look at the staking side of the dashboard, we can see it's 2.5 hours to the next rebase. Rebase happens every 8 hours. That's the length of an epoch. And that's when the number of tokens, sooooo tokens that are currently being staked, is rebased to match the number of Ohm tokens on the market, because they go out of whack. As more staking rewards are issued, the value, the number of sooooo goes up, and it's not correctly matched by the number of Ohm that are on the market. So they rebase to bring those two numbers back together, which means one sooooo will always be redeemable for 1 Ohm. Kind of an important piece of the puzzle. So that's basically how all of that works. Let's dig further.
Now, you're probably thinking, this is too good to be true, that this is a Ponzi. And there's no doubt that Ohm's memetic power is off the charts, on a par with what we used to see from the Link Marines. Ryan Watkins of Messari identified belief in Ohm as a key component of its flywheel. Olympus realized that the power of their bonding mechanism and protocol owned liquidity was substantial and began offering it as a service earlier in the year via Olympus Pro. A rapid succession of projects joined the movement, eager to capture their own liquidity and loosen the grip of predatory liquidity providers on their token issuance. Well, this in turn generates more revenue for that mighty treasury. And they've also recently expanded to Avalanche with the likes of Pangolin and Bancor featured in the initial cohort, and it wouldn't be a stretch to see similar cohorts launched on other chains. Now, up till now, Olympus has been largely maintained by a small group of developers, but with version 2, there is now a marked shift towards a fully decentralized model. So this was in fact the perfect moment to check in with the team and their new de facto frontman, JaLa, to understand where this titan of 2021 goes next and how they're feeling now the top is in.
What an incredible year Olympus has had. Can you take me through some of the highlights, the journey from where you began to where you are now, and what has been some of the exciting things, some of the challenges along the way? Just give us a sense of your year with Olympus.
In my mind, I think just getting off the ground was somewhat of a miracle, right? I mean, it was a pretty bold idea, right? To become, a floating reserve asset or reserve currency for all of crypto, and wanting people to denominate in this floating asset is a pretty bold vision. So the fact that it got off the ground, as an initial matter, I think is pretty remarkable. Even after, the price ran up initially as people were really excited and then, came back to earth those first couple of weeks, it really stuck with me that, this thing that could have gone to zero, right, didn't, and the community stood behind it, and really proved out the concept. So like just that initial wave was super important to me. And super important to the protocol. From idea to product, it was about 9 weeks and just showed like the brain power and the capabilities of the DAO. But I think more so than that, it really validated, I think, a lot of the concepts that Olympus had innovated, right? So protocol owned liquidity, and then bringing that to other protocols was a huge moment of validation for the protocol.
How do you explain this to people in a rational way? Because everybody wants to call it a Ponzi, everyone wants to call it a pyramid scheme, but it's got to be hard. How do you manage the messaging? How do you preserve the sanctity of the idea amidst all of that noise?
Yeah, there's a couple different parts that I guess we should address, right? I don't see it as a threat to, like, the dollar, certainly stability. Um, and this is it's really about having optionality, right? And I think giving users, consumers, the options of what they want to hold in their wallet, what they want to denominate in and transact in the same way that Bitcoin or something else could provide that option as well above fiat currencies. They don't necessarily need to be competitive, and we're certainly not at the stage yet where I think crypto in general, and I think Jerome Powell voiced this yesterday, is not it's not presenting really any stability issues and to the financial system. So I think we're at the stage where we're really just growing the pie, right? And it's not really competitive at this moment. In terms of explaining the vision and the sanctity, and I guess combating this notion that it's a Ponzi. Happy to touch on that as well, because it is something that weighs on me. I think you see a lot of people joking about it on Twitter, and that it's a Ponzi, and then some people have seized on that and screenshotted it and put it into Senate testimony, right? So it really is an important point to address. So I think first of all, and then we can get into the technical, quantitative aspects of it. Like at the very core of it, this is not a Ponzi because we have an intention to build out a real product. We're not intending to defraud anybody. We are building a real product, and we are bootstrapping a network, right? And so we're bootstrapping a network with high inflation, in the same way that Bitcoin and Ethereum went with high block rewards early on, which were then cut as the network grew, right? And the price rose, or the value of the network grew, right? I think it's very similar. So I think that's a good analog, right? So people say everything's a Ponzi, nothing's a Ponzi. I think at the very core, it's those two things. It's about intention, and then it's not dissimilar from bootstrapping a network. We can get into more depth about the quantitative side of it, about why it's not a Ponzi, right? I mean, we're not intending, we're not relying on people giving us money and then sending out that same money to people. We're not intending to keep APY super high forever. It's all about mirroring the growth of the network, right? And the returns to investors should be commensurate with that growth. And also our cost of capital should be commensurate with the risk. So as the protocol grows and gets de-risked, the returns to investors, go down as well, right? Commensurate with that risk. So I think it's a combination of all those things. And, we're not just reliant on bond sales for our revenues. The protocol generates the revenues in a lot of different ways, through product lines like Olympus Pro, through farming. So the bond revenue is just one small part of the picture here.
I'm curious, from an internal perspective, how you approached this issue of scaling up, but also innovating across your own product line to, I guess, move towards what will be considered now a DeFi blue chip proposition.
That's a tough question to answer.
Good.
I think scaling the idea has been natural in the fact that it just sees so many people's attention. Scaling the product and the protocol itself, I think, is challenging, and I think every company, well, as they grow, go through this. But in terms of coordinating 130 plus contributors around the world, right, and making sure that everyone is aligned to the vision, because I think as the protocol grows, right, and the community grows, people sometimes can lose sight of what we're building towards. And I think just maintaining that and driving that home and constantly re-educating the public, but also re-educating ourselves internally as to making sure that everything we're building is towards those goals, I think is super important.
Yeah, it's interesting that cross-chain so rapidly became a piece of the puzzle, because I think there's been so much skepticism around alternative layer ones. I used to work for one. I used to work for Harmony, and man, the amount of crap you got thrown at you, just like, again, you're a scam, you're a Ponzi. All you're doing is generating staking rewards that aren't really rewards. And we've suddenly seen that alternative layer ones actually can build out their own ecosystems separate and entire to themselves. I was curious how the conversations with Avalanche went, because that's the first multi-chain or cross-chain I guess, what do you call it? A client? They're not really a client or a proposition. I don't. We need new language to describe these relationships.
Yeah. So yeah, just addressing the first part, I think you mentioned just the staking rewards and people calling it a Ponzi. I think staking rewards and liquidity mining and all that is a very effective tool at bootstrapping. What matters is what comes next, right? So like you said, if you can demonstrate that you can actually build a real product, that's what makes it real, right? So there's nothing wrong with staking rewards and incentivizing people to come somewhere, but you have to do something with the next. You have to have a real vision to build, right? So I think that's we have in common with a lot of those L1s, and I think a lot of DeFi, right?
It's funny in the script I set this interview up as the difficult second album because I think that's where you are at the moment, right?
Yeah. No, it's true. It's true. This is where we grow and build. I think obviously, like I said, getting off the ground is such a remarkable accomplishment. But now, we got to grind and continue to build. So to address your question about Avalanche, so we actually haven't been in touch directly with the Avalanche team. We've been working with protocols. The main one so far has been Trader Joe. They've been a pleasure to work with, just setting up liquidity. But setting up liquidity, I think, is the first step, right? It's getting integrated. And so once we have enough liquidity, we can start to do lending. We can build out the oracles, get lending going, some more use cases. So we build out those liquidity rails, build out some supply sinks. And I think eventually our goal is on many of these chains is to build out, a native OHM experience, right? As cross-chain infrastructure improves, we really want to bring the full suite of OHM to these chains. So that's not just so today we've gone with GOHM, which is like a wrapped version of staked OHM, so that users on all these chains can benefit from the rebases on mainnet without having native staking. But eventually we want to bring native staking, bonding, and OHM and staked OHM to those chains. So that's the long-term vision.
And then presumably do the same thing on, I guess, EVM compatible chains to begin with, but are there plans to move to the likes of Solana maybe, or whisper it, Cardano?
Man, that'd be a real accomplishment to go to Cardano. Sure, why not? I mean,
never going to happen.
We are, we intend, to go to some of the Rust chains. Working on launching Olympus Pro there as well. So we have, I think, a Terra cohort launching soon, and we intend to launch on Solana. So yeah, I mean, we're there wherever there is robust, legitimate activity. We hope to be there.
And what did you make of all the forks? Because everybody forked you. You got forked left, right, center, upside down, back to front. I mean, it was ridiculous. Everyone was expecting Layer 2 summer. It wasn't. It was Olympus fork summer. Never seen anything like it.
It's really interesting. I think in some ways, like we talked about, it's a validation of the model. You just hope that, I think some of them early on were not so legitimate, right? And they were just money grabs and, for lack of a better term, I guess the bastardization of the model. And, you don't like to see that. But, again, I think we proved that it's a very, the mechanism, the bootstrapping mechanism itself has been very effective. And I think it's been cool to see other protocols take that, put their own twist on it, and build out their own ecosystems around that. So some are direct forks, right, where they want to compete to be a reserve currency. We'll see what happens with those. Again, it's like you have to have an end game in mind, right? That's the key. So if you're just going to fork Olympus and bring in a bunch of assets, you're going to wake up one day and not know what to do with it, right? And you're going to lose that monetary premium that we're trying to build. But other forks are really building some really interesting treasuries for interesting use cases. I just hate to shout one out. I think one of the really cool ones I've been following is Squid DAO with the way they bootstrapped with the NFTs, like really beautiful art, building up like a massive ETH treasury, to kind of become a fund for ETH, but also have these NFTs be a part of governance. Is pretty cool. I know, and they're building out a lot of other stuff, so I don't want to just limit them to that. But that's a good example of one. But there's a ton of other forks that are doing very interesting things, working with Lobus, Redacted, and announcing a bunch of others as well. So very exciting, and it's cool to see again that validation and how we can work together with people who are building on top of the model.
Yeah, I noticed. I mean, ClimateDAO gets a lot of.
I didn't even mention them. Yeah, of course, the OG fork.
The OG fork and Lobus. I was critical of Lobus when I had a look at it because this idea of accumulating governance troubles me. But I think it's interesting to see how these things are going to play out. It does bring me to a question, which you own 99.7% of your own liquidity. It's something like that. It's
Yeah.
I mean, you're never going to get to 100, but you're about as close to 100 as it's possible to get. Are there risks in having all of that liquidity with you? It is a form of centralization, is it?
Yes, but if you believe the DAO is governed in a decentralized manner and there's no one who can take that liquidity away, I think it's important that it gives the market comfort that that liquidity is there and permanent, right? It's interesting, I think, that, to the extent you see that as an issue, which, I'm not sure that I do, part of the cross-chain initiative in Proteus, right, long-term, and the long-term vision, right, is to have OHM be liquidity rails. And so it's going to be a counter pair, right, in trading for, hopefully tons of other protocols are going to, either be incentivizing that liquidity or holding in their own treasuries. So there's going to be OHM liquidity everywhere. And you already see protocols that are putting up proposals to start denominating their liquidity in OHM. They're going to hold that in their treasury. So we will always have a significant, hopefully, massive amount of liquidity in our treasury. But we also hope that others begin to build on top of that. Like you said, never get to 100. I actually hope the percentage goes down, right? Even though the nominal number goes up, I hope the percentage goes down as other protocols begin to build on top of it and use OHM as liquidity rails and routing.
And I probably should have dug a little deeper, but I don't have it off the top of my head. But the liquidity that you own, is it locked up or can it be unlocked? Because I know with like the Bancor Vortex, once it gets locked in, they can never remove it. It's a one-way thing, and once it's there, it's there.
It's not locked, but there's a social contract that it's locked, and policy has the ability to tweak things, right? And so there's a proposal up to move some of the liquidity to a concentrated B3 pool, right? So as long as it's in the spirit of maintaining liquidity or increasing liquidity, reducing slippage, policy team has the tools available to do that. But no, it's not going anywhere. It was written, early on, to the extent, the price ever dipped below risk-free value, some liquidity could be removed, but.
Oh, you're a long way off from that.
I don't see that coming to pass. But yeah, so the policy has the tools available to them, to make sure the system is healthy, but there's no intention for that liquidity ever to go anywhere.
So you're moving in V2 to basically as fully as decentralized as it's possible to be at this point. Once you get there, you are heavily reliant on the governance process and the governance mechanisms to assist you here. And one of the things I've noticed in so many protocols is the governance is very, very difficult.
I agree. I think we're all grappling with what like true decentralization means and to what extent it's possible, right? I think the whole world has been dealing with that for all of history in some respects. I think the goal is eventually that I think there are ways to mitigate some of those issues, but that you don't need massive governance decisions for the core products and principles of the protocol, right? And so you can obviate some of those issues if, for example, we vote on a rewards framework where we have the reward rate dropping over time, whether it's algorithmically or it's decided ahead of time, right? And you don't have these massive governance wars every time a vote like that comes up, or bond capacities are almost in a way done through governance, but also the framework is set so that you can't have massive changes, and that this thing it doesn't run on autopilot, but the major levers, I think, are automated. I think this is a long way off, but automated to an extent that, the governance power that one could accumulate doesn't pose a risk to the system.
Anyone looking at the OHM price chart right now is going to go, oh my God, this thing is dead. The bubble has burst. It's over. And I know that in the OHM community, there's been somewhat dismay at price action. How are you managing your community in this moment in time? Because you've got a lot on the roadmap that's exciting, but at the same time, people kind of are quite myopic. They really only see price. And your Ohmies are such an important piece of the puzzle for you. I'm curious what your thinking is, or how you manage that whole thing.
I give you, I mean, my thinking and how, I hope the community sees it is that, the entire market had a pretty strong run up, maybe not quite a blow off top, but, OHM itself has been cyclical, but also had a very strong run. I mean, I think if you look at the market cap today, and which is a much better indicator than price because supply is always increasing, we're sitting around a $2.5 billion market cap where, if you look back on the summer, we're between 5 and 10x higher in market cap than we were then. And so for me, I like to zoom out and just marvel at how far we've come and how strong, these levels have actually remained. So while prices come down a lot, I think the size of the network and the market cap have been actually extremely strong. And I think it bodes very well. Like I said, we've gone through these cycles, but I think keeping these levels, even after this drop in price, I think is extremely bullish in my mind. And I think, as we move towards further reductions in the reward rate and we move past this migration, which I think was a little bit of a cloud, there's like huge unlocks, I think, going forward. Plus, I can barely keep up with all the activity. I shouldn't even say I can't keep up with all the activity in the DAO. It's astounding the amount of work that's going on. And so people realize that. I think, it's really encouraging as well.
So I guess one of the key strategies for you has been diversification across the products, adding new, customers to that Olympus Pro model. What else is on the roadmap? I don't want to use the word roadmap. Let me rephrase that. What's on the horizon for next year? Where are you kind of thinking that this is going to go? Because I guess there's tons of ideas and most will be rejected, but there's got to be some that are kind of that are an itch that needs scratching at this point.
There's a lot. I think, cross-chain is a big one. Like full cross-chain initiative, I'm hoping begins to roll out early next year. And that, again, that's dependent on some of the infrastructure being built, but I think that is a huge component. Second one from the revenue side, I think is, a stronger focus on treasury management. And, we've been very conservative to date as custodians of a large treasury. We will continue to be conservative, but I think being a little bit more aggressive in generating revenue from our treasury is going to be really important moving forward. So that is a strong focus. Building out Olympus Pro, continuing to do that, maybe moving that to a permissionless platform eventually is really key, both to, I think, the revenue generating side, but also freeing people up on our end to push some of the new initiatives. And there's a ton of just like really exciting other projects. So, Olympus Gives, I think, Taiki, where you as redirecting yield from rebases is like a really cool new project and has a lot of use cases, starting with charity, but I think there's a lot of commercial uses as well. So that's what I'm really excited about. I think there's a ton going on. I hate to limit it. But I think in my mind, I think those are the focuses. And then I think V2 bonds are going to be really exciting. This autopilot for bonds. It frees up policy to focus on other things, but also just going to have some really cool dynamics attached to it.
Well, listen, you've had what can only be described as a monster of a year, and I wish you all of the best for next year, and I hope it continues.
Thank you so much. It was a pleasure being here.
So I hope that gave you a sense of why Olympus is probably one of the most interesting projects that came out in 2021. And I hope that they will continue to evolve and develop. And it feels like, all those forks aside, they've done something really substantial. But it has yet to be tested under really stressful bear market conditions. And as we've seen in the last few weeks or so, sell pressure does exist and it can exert downward pressure on the OHM protocol. But still, so much to look forward to with this particular protocol. And for me, it's been the most interesting project that I've followed all year. I hope you have a wonderful Christmas and New Year, and we will see you in 2022 for more of the same, where who knows what is going to happen. I'll see you on the next one. This was the Defiant.